Hey guys, how's it going? It's Matt. I hope you guys are having a good day today and an even better day tomorrow. First, let's start off this week this review as always, with a review of my plan going into this past week. Okay guys, so as I mentioned in the past video, during week 17 and 18 of this challenge, I did not make any transactions, as you can see here in the history tab. It was certainly an interesting period as an investor in these companies. It was a little too real for my liking, considering the not Stonktember joke that I made in the last video. But before we jump to that, let's obviously quickly run into the review of the actual week. All right, guys, so to start off with a summary of the past 2 weeks, the best performing holding that I had was in Palantir, ticker PLTR, which performed up 9.25% over the 2-week period. This was actually a little too close to last week's predictions for comfort, as I previously mentioned with not Stocktember. It seems to have clouded the judgment of a lot of investors. So obviously there are quite a few companies in red here, and overall performance has been a little rough. But speaking of the specific time period, the worst performer that I had was in Peloton, ticker PTON, which dropped 9.59%. And overall, my portfolio was down this week, or this past 2 weeks. In total, I was down about $600, or roughly 7.3%. And when comparing that to the S&P was down 1.93%. So although it has obviously been a rough 2 weeks, performing more than 3 times worse than the S&P over that time period, I am still obviously very confident in these positions and the prices that I have them at, as well as their current prices. The longer the period of stagnancy with continual growth in terms of the actual profits, earnings, etc., all the growth that these companies are seeing while the stock price is remaining quite stagnant usually is a good sign. Obviously, there's occasional growth and decays that account for a lot of opportunities to purchase and have a good dollar cost averaging. But overall, the stagnancy is quite good. It does mean that eventually the share price will equal what the company's actually worth. So obviously, all said and done, basically what I'm saying is it seems like the stagnancy just results in these companies being undervalued and a good buying opportunity. And in terms of overall performance, the best performer is still obviously in DraftKings, ticker DKNG, which is up 36.07% over the past 18 weeks. In terms of my worst performer, it is still in Skills, ticker SKLZ. Overall, this position is down 19.46%, which is obviously a big drop. And when comparing the portfolio performance to the S&P over the same time period, with weighted cost averaging in mind based off of my purchases, the S&P is up 3.22%. Therefore, my portfolio is currently, as recording this video, performing slightly under that of the S&P, as it is at 2.5% increase before fees. After fees, however, we are obviously underperforming, as the account is actually in the negative right now, down about 0.4%. And as I've previously stated, with the S&P trading at and around now all-time highs, obviously September has been a bit of a rough one. And my holdings still not even within 20% of their 52-week highs, never mind their all-time highs. There's still an opportunity. The fundamentals of these companies haven't really changed all that much. It's really just an opportunity throughout these rocky couple of weeks of uncertainty. But again, market correction, as we're somewhat seeing here, I wouldn't really say it is, but some may argue it is obviously hasn't really been that impactful in the grand scheme of things. Down 7% in the past 2 weeks is obviously bad, but when we go from, being up above the S&P to only slightly underperforming the S&P right now, it's really not that bad of a sign. And again, with all that out of the way, guys, let's look on to my plan for week 19 of this challenge. Now that we only have 4 holdings that are significantly in the red and the rest are around 0 or in the positive, I wouldn't mind making changes to minimize losses if need be. Obviously, with everything going on in China, Tencent is kind of really taking a beating. But I'm still very confident in the company. Obviously, I have a lot of faith in their products and their entire influence, really. But China is a bit of a risk that's not necessarily been accounted for in terms of the original risk that was accounted for in terms of China or a Chinese investment. But again, that's kind of what you get with investing in China. But anyways, yeah, I just think it's really a case of a lot of investors not being that confident in the company and not realizing that it's more so a confidence issue in China. But moving on to Skills, on the other hand, like previously mentioned, it was more of a play with recent drops. It hasn't really proven to be a valuable holding, so I wouldn't mind getting rid of it if I feel like I absolutely need to. I don't see it really going that much lower, but I said that a couple of dollars ago in the price, so could obviously be wrong in that aspect. Coinbase obviously had a rough couple of months with crypto fading in and out of the news, and a lot of stuff around regulations and government intervening and yada yada. So that's a whole nother video. But obviously I still do have faith in the crypto sphere, as well as Coinbase being a front runner in that. Q3 earnings report, I believe it's supposed to be somewhere in the end of the first week of November. I'm really keeping my eye on that. I think this is a real catalyst for the company. I think if they smash their earnings just like they did with Q2, people will really see that it's actually, the company is like run well, and it's not completely intertwined with the fading in and out of the crypto investments. Like a lot of people, if you compare Bitcoin pricing to Coinbase pricing, you'll see quite a bit of congruency. I don't think that's the case. I think if anything, you could consider the Coinbase price to be more congruent with the volume of cryptocurrencies, not necessarily the price, even though those can be intertwined as well. But nevertheless, they're charging fees based off of transferring of funds and purchasing of these investments in cryptos. So obviously, the more volume there is, the more they're going to be earning. Obviously, the higher that those reach, the more that they're going to be earning as well. But really, volume really turns out the profits, not so much the actual pricing. But obviously, it has a role. So either way, I think investors will start to see the pattern of the profits that they're starting to increase upon with the Q3 earnings when they do come out, and see that as obviously an opportune time to pile into the company. And that's it for today, guys. I hope you guys enjoyed the video. Please let me know what you think in the comments down below. I'll be uploading updates every week as always, summarizing the past week and pointing out some ideas going into this upcoming week of this challenge to 500,000. Thanks again for watching, guys. Peace.